Welcome back. Now, 2025 saw a big overhaul of the GST regime. How is this translating on ground, and what can we expect in the new year on the indirect tax front? Well, let's get in two experts to give us some more perspective on this. Pratik Jain, partner at Pricewaterhouse, and MS Mani, partner at GST at Deloitte India, with us. Gentlemen, thank you so much for joining in. Both of you are, of course, veterans, and we've been trying to understand this GST reform through your lens for so many years now. So let's start right there, Mr. Mani. Now, the grouse, as we all know, you already know my first question, right? Collections are dropping. November collections gross 1.7, net even lower at about 1.5 lakh crores. So the volumes was supposed to lead to more tax buoyancy and make up for the reduction in the rate of the tax itself. Is it time to get worried, or should we be a little more patient, let another month or two roll on?
So Survi, I don't think there's any reason for worry, any reason for concern. It's, in my opinion, it's kind of zero, because what we have seen even earlier when the rates were reduced significantly in 2018 and 19, it takes a few months for the volumes to catch up with the reduction of rates and the volumes to make up for the reduction of rates. Now, the kind of reform that we have seen from September 22nd has been completely path-breaking, unprecedented. And if you look at the data very carefully, you will see that the collections in last month, compared to the same month in the previous year, were exactly neck to neck. There was no reduction, there was no increase, which with the kind of steep reductions that we saw, because bear in mind, on many categories, we saw a reduction from 28 to 18, which is a 10% reduction, which is huge. Despite that, if the collections are still maintaining equilibrium or stable level, I would say that they are now destined to go up significantly as collections improve. Our experience also has been that when you look at each segment, whether you look at the auto sector, whether you look at the real estate sector, whether you look at FMCG, whether you look at travel hospitality, all these sectors are doing very, very well. And that is what has contributed to the last quarter GDP data, which has crossed 8%. So when you combine the GDP data with the kind of reform that the government has undertaken, I would say the optimism in the coming months on GST collections is huge. There's only one way it can go, and that is up.
Okay, that's reassuring. That's good to hear. Let's ask Pratik if he is equally bullish. Pratik, is that how you're reading it? And if that's the case, then how soon do we get back to northwards of 2 lakh crores? That's our comfort zone. We got so used to seeing monthly collections top 2 lakh crore rupees.
Yeah, it will take some time. I agree with Mani. I mean, if you look at the revenue neutral rate now, it is less than 10%, which pre-GST regime used to be much higher, right? But despite that, the collections have gone up significantly over the last few years. And that's how the indirect tax reforms play out. As you reduce the tax rate, tax base increases, and, ultimately you get more tax. It will take some time. I mean, the government had announced at that point in time when GST 2.0 was coming that they expect around 48,000 crore of revenue dip because of this. Now, 48,000 crore in context of our kind of balance sheet at this point in time is not a very significant amount. And as we see the next year coming, and as we see March coming, which is the last month of the next quarter, you will see the collection going up. So I'm not unduly worried about the collection at this point in time. I'm not sure when will we reach 2 lakh crore. Of course, it'll take some time before we reach there. I think they're expecting around 9% year-on-year growth this year after the cuts, which if they achieve, it'll be a significant one. So we'll have to wait and watch, but I think we are going in the right direction.
Okay. Yeah, I mean, with some sectors like passenger vehicles, that jump in volumes has been very, very clear and very sudden. I think there were industry estimates saying that the last month itself, some 22% volume growth. So that's pretty heartening, to say the least. But which are the other segments, Pratik, where you expect the volume surge to really start showing up? And that volume to then compensate for the reduction in tax, because that biggest reduction was 28%, 18%. So those were the big slabs where the tweaks happened.
Yeah, so auto is clearly one. We see cement picking up as well. Although, I mean, one can argue that cement rate reduction may not directly lead to more consumption of cement that way. But of course, the cost of construction goes down. So cement is another one. We see the sentiments improving, and therefore things like garments and other FMCG products. You have some of the consumer products like air conditioners and washing machines and so on and so forth. So I think there are segments largely in the consumer durable. Of course, vehicles that we spoke about. We speak about cement. These are the key segments. But the overall sentiments, because you have more money in the hands of consumer, and bear in mind that in the beginning of the year, the finance minister gave a large sum of money in the hand of individuals by way of income tax cuts as well. So if you have more money in the hands of the consumer, you'll see overall uplift in consumption. But these are the key segments that we talk about.
Gentlemen, I come now to the other larger issue that the market's also sort of watching very carefully. Total tax collections. We had the year-to-date net direct tax collection data just 2 or 3 days out. I think so we're up April till now. On direct taxes, we're up about 8%. On indirect taxes, the growth seems to be slow because of the GST changes since September. So if we put both sides together for the fiscal year 26, then what are we looking at right now as the third quarter ends? Mr. Mani?
I would say that to a very large extent, both the income tax collections and the GST collections are a function of how the economy is doing. And as far as we have GDP growth, and as Pratik rightly mentioned, we have more of disposable income in the hands of people, which has been increased because of the rates of income tax went down. We will see growth further and further. And therefore, if we compare it at the year-end time, if we look at April to March, I don't think we will see a deficit either in the overall tax collection, or if you take GST and income tax separately, we will see any reduction there. The key point, I would say, which we have seen in the current fiscal year till now, in the 9 months, has been there was an element of seasonality in the GST collections. We used to have certain months where consumption would be very slow, certain months, festive months, where consumption would be very high. If you look at the month on GST collections, you will see the seasonality of the GST collections is coming down. It's becoming more and more stable. And the moment it becomes more and more stable, as far as the government is concerned, it's very predictable. Because bear in mind, when it comes to income tax collections, and especially on the corporate side, the advance tax, they are collected on a quarter-wise basis, whereas the GST collections are month on month. Consequently, if there is stability and predictability in the GST collections as well, without the seasonality impacting it too much, in that case, going forward, there'll be much more, I would say, reason for the government to progress on the next stage of reform. Because what we shouldn't be doing at this stage is to sit back and say GST 2.0 is over. Let's not, tinker too much around with it. I think the next stage of reform is staring at us in terms of what we need to do to simplify GST further.
Okay, so more simplification of GST perhaps needed. Pratik, come in on this. What is your estimate right now suggesting? Net income tax collections, what can it be? I mean, mid-single digits, high single digits? Where will indirect taxes be in terms of growth this year? And are there any other outlying issues that you'd want to flag off that need to be resolved to get the GST collections, more robust in the coming months?
No, look, I don't think there are any such issues which can be resolved in the next few months. I mean, of course, as Manish talked about, the reform is a larger piece, which we'll have to look at. I personally think that, of course, GST collections will miss the target because of the rate cuts. Now, whether that will be very significant in the overall context, I don't think so. And whether we'll make it up in the longer run, I think we will. On the income tax side, of course, it is slightly lower than expected. But with the last quarter numbers coming out, the GDP or the growth, I think, in the third quarter rather, I think in the last quarter, you might see an uplift there as well. I don't want to take a guess as to how much will the income tax collection be finally. But again, the shortfall, if any, will not be very significant is what I can say.
Okay. Well, I guess it's fingers crossed for the remainder of the fiscal year, and we'll see how those numbers shape up in Jan, Feb and March. But for now, that's a helpful context to have, that we don't need to start worrying just yet with the numbers as of November. Thank you very much, gentlemen, for being with us. And let me also take this opportunity of wishing you a very Merry Christmas and a Fabulous end to the year. Wish you a very, very happy new year.
Thank you very much. Wish you and your viewers also a very happy new year.
Thank you so much. Well, with that, it's time out on Bazaar. Thank you for watching. We have Chart Busters coming up next.